Gold demand traditionally rises with a weaker dollar and lower U.S. interest rates. Gold's safe haven status and ability to remain a reliable store of value also make it attractive amid economic and geopolitical uncertainty. It has low correlation with other assets, so gold can act as insurance during falling markets and times of geopolitical stress. On Friday, gold prices fell 9%, its sharpest one-day drop since 1983. That's shortly after the precious metal touched a record high of $3,500 per ounce last month. Although the price still remains about 70% higher than it was at the same time last year. So what are the fundamental reasons for the gold price fluctuations? How much is it also reflection of the current debates of the global financial systems? Let's ask our panelists. Joining us in Portland, Yan Liang, Kramer Chair, Professor of Economics with Willamette University in Hong Kong, Hong Hao, Managing Partner and Chief Investment Officer with Lotus Asset Management. Last but not least, Ibrahim Rahman, Head of Indonesia Financial Group Progress and lecturer at the School of Sustainable Development with the University of Indonesia. Thank you so much for joining us. Now, what do you make of behind-the-scene logic regarding the latest dramatic fluctuation of gold prices in the global market?
Gold and silver price and also the other precious metals price went through a parabolic surge in recent months, especially in the months of January. I think gold price surged almost 60%. I think silver price as well, right? So platinum, palladium surging more than 40% each. So it's a dramatic price increase that the world has never seen before. So I think once you get into this parabolic phase of price development, the market tend to crash towards the end, and that was what happened. So in the last few days of January, many of the metal exchanges around the world increased margin requirement for building and holding a position in the exchange. So I think as a result, you actually require substantial more amount of money to be trading these contracts. So I think as a result, some of the traders would have to reduce their size and positions. So then it creates a avalanche effect on the market. And so once the market price starting to plunge, then you're seeing margin calls being issued by brokers. And if traders cannot meet the margin call requirement, then they would be forced to close their positions. And the closure can be quite disorderly. And this is actually what happened. But thank God, the price is surging back right now.
On the other hand, we have seen gold prices continue to rise and central banks continue to increase, to a certain extent, their reserve in gold. What does that say to you, Mr. Hong?
Yeah, well, I think the dollar debasement trade has been going on for a period of time now, especially going into 2025. I think the debasement trade of the US dollars has been accelerating. Many of the central banks around the world has been accumulating gold as part of the reserve assets. And in particular, the Chinese central bank has been delaying or reducing US Treasury purchase and instead building up gold accumulation as well. So I think now many of the central banks around the world is once again recognizing gold's role in diversifying a central bank's reserve.
Do you see that trend likely to continue?
I think gold price at about 5,000 and above seems to be a fair value to us, meaning that demand right now way outstrips supply. As price increase, you actually create more demand for gold. People are basically buying out of panic, right? So they're just afraid that as gold price surging, they may not be able to buy that $5,000 later on. So I think more likely than not, $5,000 or just a bit below is the bottom for gold price for this correction, and the gold should be resuming its uptrend from here.
Yeah. What about for you, Mr. Ibrahim? I mean, you're based in Indonesia. How how is the central bank in your country and others in Southeast Asia, East Asia digesting the latest fluctuation?
Yeah, I think as Hong mentioned that increase in gold can be driven by at least three major reasons. First, macroeconomic reasons is continuous declining in Fed rate, which means that the interest on interest-bearing asset will be declining. For Indonesia as well, we experience a dramatic increase on a compound annual growth rate of 3% since the last 5 years, meaning that it is very important to keep gold as an alternative to US dollars as a central bank reserve in the current condition of full of uncertainty and all the global tensions involving many countries at the same time.
Professor Yan, you are based in the US. Now, how do economists digesting the latest phenomenon? Of course, it can be a technical adjustment, but in the long run, what does that say about the US dollars and also this current financial system?
Right. Well, I think in the US, investors and also I think policymakers alike are thinking about, this dollar trend. I think there are a lot of concerns. For one, for example, the challenge to the central bank independence, as we know that President Trump has been pressuring the central bankers to lower interest rates to stimulate and juice up the economy. So the kinds of infringement on the central bank independence policymaking has really caused a lot of doubt and concerns about independent monetary policy and therefore inflation fighting and therefore the dollar value. And I think on top of that, as far as investment strategy is concerned, I think in the private sector, there's also the concern about high inflation and also the correlation, positive ones, between stocks and fixed income assets. And so that's why I think, companies like Morgan Stanley and others have already come up with a strategy that shift from previous 60-40 strategy, right? 60% in equity, 40% in bonds, to now, more 60, 20, and 20, adding 20% of alternative assets, such as gold, cryptos, and rental incomes, and so on. So I think there's some kind of testament, right, in this case, from both the private sector, but also in the policymaking circle, to have the concerns about dollar values. Not to mention, I think the global geopolitical trend has also indicated that, as I think the previous panelists talked about, many central bankers are adding more gold to their reserves. And we have seen this as a long-term trend because the dollar share of the global foreign exchange reserves has gone down from the 70% in the 2010s to now only about 57%. So this is a long-term trend for central bankers to diversify away from the very dollar-centered kind of a global financial safety net. And I think the added momentum has accelerated since the cease of the Russians' foreign exchange reserves, mostly in dollars. So I think this kind of long-term trend is going to continue, especially, again, with the heightened geopolitical uncertainties and also economic uncertainties.
Right. Mr. Hong, we have been hearing debates about this and also attention spotlight being shining on gold, since 2022 almost. So over the years, what have we learned about the logic in the market and how is it related to some of the latest events, current affairs events as we speak?
Yeah, well, I think it is really the credibility of the dollar. Ever since 2022, when the Russian-Ukraine war broke out, the U.S. actually weaponized the U.S. dollars during that time, right? So it actually expropriated the Russian gold reserve, foreign currency reserve. And so Russia has to rely on gold, to get by, basically. So I think ever since then, because people realized that the U.S. dollar is just not what it used to be, it can be weaponized. Back then, before 2022, the U.S. always threatened to weaponize the U.S. dollar, but not actually use this the ultimatum. I think 2022 is the first time they actually use it, to take away the Russian forex reserve. So I think people realize that wow, this game is changing, right? And then suddenly people also realize that the U.S. Treasury situation, right? So this year in 2026, the U.S. Treasury debt would amount to more than 40 trillion US dollars in size. And I think that's roughly, at about 5,000 is roughly the total market cap for gold. So I think people realize that only gold can actually replace the U.S. treasury as part of the viable central bank reserve currency. So I think as a result, people are just building up gold reserve, and also in this point in time, given the rising geopolitical risk, I think everyone is underowned gold, right? Including central bank, including rich individuals, and also including the small retail investors. So I think people starting to come back to senses and then start to buy, panic.
Professor Liang, as we know, early 1970s, when the Bretton Woods system collapsed, a few European banks trying to establish some kinds of quasi-gold standard, linking gold with the latest financial systems in the world. But the U.S. prefer it is more about U.S. dollar. So now, looking at where gold is and its continued rising prices, many wonder whether we should take a closer look at the different players and their attempts of using gold as a balancer.
Right. And I think in addition to gold, I would argue that we're also seeing this multipolar currency system being unfold in front of us, right? And I think, as Prime Minister of Canada, Mark Carney, really addressed, at the Davos speech, that the world is experiencing a rupture. And I think we are also seeing this in terms of the international currency or international financial system, that the dollar hegemony is being challenged. We're starting to see, other currencies, they're being used as payment vehicles, also being reserve currencies, right? That now euro is about 20% of the foreign exchange reserves. China is a latecomer, but it's also growing as it's important in the global payment system and in terms of financing vehicles and so on. So I think what we're seeing is really, gold, of course, is being an important part of the kinds of international financial system. So having said all of that, I think the trend is clear that the world is moving towards a more multipolar system with its currency system as well.
We all remembered quite well, particularly these days, about the demise of the Bretton Woods, but the gold war, so to speak, between Europe and the United States at that time. Now we are seeing what Professor Liang just quoted Prime Minister Carney as a rupture. We can also say there has been a shift of relations across the Atlantic, some of the major currencies, where some of the major currencies are. So tell me more about how you are looking at the latest discussions, not only among economists, but also historians.
Yeah, I think we are in Southeast Asia, like Indonesia, Malaysia, Vietnam, Thailand. We have been catering the interests for United States for a long, long time. And then we just realized that what we have been given to United States all along has not been interpreted correctly with the current trade war and sentiment that increased negative sentiment towards US dollars in particular. So we can then understand why Central Bank of Indonesia, for instance, Bank Indonesia or other central bank in Southeast Asia is, tending towards de-dollarizations and trying to reduce the concentration risk on using US dollars as the anchor for reserve, knowing that basically we are not that too close to United States in terms of trade, for instance, except for the Philippines or Vietnam. So I think for countries like Indonesia, Malaysia, and Thailand, it is very important for us to be more creative in diversifying our reserve out from US dollars, because our activities is also in distance towards US dollars. So I think I don't think it is radically backward towards Bretton Woods system, but it is gradual process of not using US dollar as the main anchor in our currency reserve for many central banks in Southeast Asia.
The economic order between countries is being restructured. Basically, there are gradually you will see two supply chains, two separate different supply chains between East and West. And also the Chinese trade relationship with Asian countries are now getting substantially larger. So as a result, it actually creates the demand for the Chinese yuan cross-border. And also nowadays, the cross-border trade, more than 50%, close to 60%, is actually settled in yuan. right? So, basically you create a substantial interest and demand in the Chinese yuan across the Asian countries. So therefore, these countries and also China's dependency on the US dollar is actually decreasing. Without a doubt, I think over the next couple of years, this trend will be even more obvious than what it is now.
At the same time, we see economists in the U.S. Has been talking about their version, very interestingly, because we have seen the U.S. debt has already crossed what some call the Rubicon level. And as a result of that, many are saying U.S. is building Bretton Woods 2.0, trying to rewrite gold prices to deal with its debt problems. Now, Professor Liang, how do you see the argument from the other side?
Well, I think in the US, the debate about the so-called fiscal sustainability is actually quite split. There are definitely economists who believe this is a big problem, and the way to get out of this conundrum is really by inflating the currency, right? In a way, sort of create a kind of currency debasement, and therefore that would reduce the real debt burden. There's also people who argue that these kinds of sort of fiscal difficulties, right, can be addressed by higher growth. And I think from the Federal Chair nominee, Kevin Warsh's point of view, right? He argued about AI and productivity boom, and so that would help to reduce inflation, and so in a way that would help to sustain the U.S. economy and bring more sort of confidence in the dollar, especially argue about shrinking the balance sheets of the Federal Reserve in a way to, again, consolidate and boost a little bit the confidence in terms of the dollar. But I think, overall, this is a difficult issue in the sense that when the interest rate is high, that means the federal government needs to pay more in terms of interest payments. And so that does increase the fiscal debt. But at the same time, when a lot of this fiscal debt is denominated in the US dollar, right, which the US government has unlimited amount of dollar as much as they would like to create. Okay. And so that wouldn't be really a problem in terms of unsustainability, in terms of unpayable debt. But it does have a lot of distributional impacts, right? Because a lot of the rich, the upper income class are the ones that hold a lot of these treasuries, and they are enjoying this high interest income. And so I think that could be a significant problem when it comes to kind of distributional impacts, and the fact that the U.S. has been experiencing this K-shaped growth, right? The top 10% have over 90% of the stock market, and they have contributed over 50% of consumption. I think that could be really a long-term issue as well.
Ibrahim, your thoughts on the same question, please.
Yeah, I think what is Professor Liang mentioned is also happening in many countries in Southeast Asia. Like people are starting to understand gold more than grandparents or older generation type of investment. So during the peak of gold price 1-2 weeks ago in Jakarta, you couldn't even enter the building as people are stranded to order gold as part of their new type of investment. So I think it will be very interesting to see whether it goes as a structural condition or persistent conditions, or is it cyclical ones. I'm still thinking that with the whole sentiments towards United States and all actions they have made recently, negative sentiment has led us to believe that US dollar is not as strong as what we expected before. And we expect later, when everything has been moderated, then everything will go towards standard equilibrium. But we don't know yet what will be the end game of this volatility of price. But as for now, we believe that gold has been one of the favorite, and it's becoming more than standard investment as it used to be 10 or 5 years ago.
Right. We have been hearing from Chinese banks warning right before the plunge, the huge plunge we see in the international market, of the fluctuation of prices of gold. Meanwhile, we also see China has decided to cut the gold exemption tax. So what do all of these measures combined together mean for the cooling down of the minds of investors, and also cutting short maybe the lines waiting right outside the gold shops, Mr. Hong?
Yeah, I think the authorities is trying to slow down the rally. As gold and silver price continue to surge, we're actually seeing the market, many of the traders are actually adding leverage to their position. So it's a recipe for disaster, a recipe for crash. And I think that is a direct cause of the recent crash that we observed a few days ago. I think right now, we're observing the leverage in the market is being reduced substantially. I think the authority has achieved at least part of their goal to reduce leverage. So, if you look at the volatility in the gold and silver price, they're starting to subside. And also, in terms of leverage, in terms of the number of open interest in the gold and silver market in the Shanghai Futures Exchange, they're being reduced as well. And also, as a result, the exchange here is actually lowering once again the margin requirement after increasing it a few times since the beginning of this year. So what that is telling us that the authority is sort of achieving at least part of their goal, and the volatility of the market is starting to subside, and then the price of gold and silver can be refocused back onto their fundamentals.
Mr. Rahman, what do you think? Have those policies worked? What about in your country? How do you see policymakers and help investors, particularly individual investors, to stay reasonable?
Well, the increased price in gold has been happening at the same time where Indonesia's stock market was hit by Morgan Stanley, rebalancing Indonesia's stock just a couple of days ago. So as we have seen that Morgan Stanley has, reduced their confidence towards Indonesia's stock exchange due to regulatory concerns of transparency and governance. At the same time, price of gold has been increasing dramatically to force people, flock outside of, Antam and Katambang, which is selling all the metals. So I think it is very important to moderate, because otherwise it will be, huge, excess demand for gold will not be good either for the market. So I think we in Indonesia, we are also looking at new stability, as putting all assets into gold is also not good, given that we have been relying more on several assets altogether. So I think what authorities has been doing so far is trying to reduce the shock and reduce the demand for gold in more substantial way.
Professor Liang, what is your observation?
I think on the one hand, I think it's great for the Chinese government to put in these policies to put sort of a break and also to reduce leverages. I think Mr. Hong mentioned. I think this is a very good measure in the short term to stabilize prices, expectations, and also, just in terms of the leverage ratio. But I also think that in the long term, gold is still a very important strategic asset. And I think, again, we have mentioned about central banks' tendency to diversify. We're talking about private investments to diversify, and gold is treating as a safe haven asset in this rising geopolitical, uncertainties. And so I think in the long term, there's really a lot of potential, right, for gold to play a much more important role in the global financial and currency system. And that's why I think, China, the government has been really, implement strategies. For example, the newly concluded the Asian Financial Summit that have already inked the cooperation agreements between Shanghai Gold Exchange and Hong Kong Gold Exchange, and to develop more storage space in Shenzhen. And I think that's also very important when it comes to, China has more say in terms of using RMB to denominate gold prices and gold trading. So I think this is again, a sensible strategy going forward to, on the one hand, stabilize gold prices and again, prevent over leverage, but in the longer term, to really develop the infrastructure, the facility to continue to play a key role in both determining the gold prices, but also in that broader sense of having a more important role in the global financial system.
We're seeing very complex and volatile environment as a result of many latest geopolitical and geoeconomic changes. So as a result, Mr. Hong, how do you see China is trying to safeguard, rather, the security of its investment and maintain so that it will maintain a certain level, not only in the near term, but also in the longer term?
Yeah, well, I think besides using gold to replace the U.S. Treasury as part of our central bank reserve assets, I think the Chinese authorities has also been developing cross-border payment system in the past 10 years already. So right now, if you travel in Southeast Asia, in many of the Asian countries, you will be able to actually use the Chinese cross-border payment system to settle most of your bills, including Alipay and also WeChat Pay and many other forms to do so. So I think, in so doing, it creates a larger demand for the Chinese yuan in the Asian countries, and also diversifying not only China, but also many of the Asian countries' dependency on the US dollars. That is safety in its own good. So I think going forward, besides doing this, I believe that the Chinese purchase of the U.S. Treasury bond would continue to decelerate, especially given the outlook for the U.S. debt is still very uncertain, and also I think China is trying to developing more relationship with the European trading partners. So I think now the European countries is now the second trading partner with China, well beyond the US. So by diversifying the trade relationship between the US and China, so I would say that the Chinese central bank reserve assets is looking better than before. It's safer than before.
Right, Mr. Rahman. Emerging economies, big developing countries are all observing very closely and trying to adjust accordingly. What is the way to go for your economy and your financial stability?
Yeah, it's very interesting that if we rely on studies relating gold and United States dollar during the last couple of years, they have been negatively correlated for many years, but not anymore. So it is suggesting that gold in itself has been standing alone, disintegrated towards what's going on with the United States dollar. So for Indonesia, for instance, it is very important to see this as the way to leverage our position, the central bank as well. They are required to be more conservative in maintaining the reserve, knowing that fluctuations and volatility is always happening due to geopolitical shocks and political instability during the last couple of years, especially in the global level. So I think for Indonesia and other ASEAN countries, it is important to rebalancing our portfolio and see the leverage of gold as an alternative to strengthen our capacity and to restore our reserve so that we can anticipate the whole fluctuations in the future.
I see. Thank you so much for joining us. Really appreciate it.